Prakash Agarwal as well as Gurudatta GG joining us from Estima Pharma. Thanks so much, gentlemen, for joining us as well on this discussion today and to take us through some of the trends at play. Prakash also joining us from Axis Capital. So let me just start off with you, Mr. Gurudatta, and talk about what you're really seeing in terms of a trend right now. What's happening with pharma stocks at this point of time? Are we pricing in a recovery in the US business? What's the overarching trend that you're seeing?
Yes. See, what is happening in US at this moment of time is as a consolidation is going on at this moment of time. Some of the companies are withdrawing certain products which are not moving, and those particular products are withdrawn and new products are getting added into the system. That is one particular factor wherein people are getting good prices for the pharma stocks. As well as when you come to the biosimilar side, a lot of new products are also getting approved. If you see the list of about in 2020, there are about 10 new products are getting introduced into the market, and each valued at least about $1 billion US market. With this, we can say that one particular thing is consolidation is going on. Second thing is even the prices are increasing trend with respect to when we compare it to 1.5 years before, like somewhere in July 2018, when we see price erosion was in a great strength, but now it is increasing mode and people are getting more products approval, and the supply chain is also getting very much importance.
Sure. Let's get your take on this as well, Prakash. We also spoke to Cipla post earnings. They were also confident that pricing would just be better, in fact, in the US, going forward, and cyclicality was actually towards the lower end.
So I have a little different take. I would say that price erosion, though continuing, but there are pockets where there are supply disruptions, where there has been a better sales realization. So it's a mixed bag. As of now, we haven't seen price increases. It's just that the discounts have come down and price realization have become partly better. The good part is the concentration risk has come down. So earlier one product used to drive the overall EBITDA margins. Now most of the products are now not concentrated. So that way we are better placed. But price erosion mid-single digit still continues. On a blended basis, I would say price realizations are improving.
Last time though, Prakash, when the cycle did pick up, Indian companies, grew leaps and bounds from 2009 all the way to 2015, and so did the stocks along with it. Do you really think Indian companies are sort of well prepared this time around also to grab if indeed US generic sees a big cycle up move, or rather a cyclical up move?
Yeah, so they are clearly better placed this time. We have seen, from a high base, we are coming to a normalized base. The only issue here is that US FDA approvals have literally slowed down given the FDA issues across the plants. So what we need to see is incrementally facilities getting cleared, and that's how we would see incremental approvals. I would say approval rates have actually come down versus what we saw in the past couple of years. So what we need to see for the next up move is US FDA clearance. Otherwise, we all set for a good, at least a high single digit growth is possible for the next couple of years, versus we have seen a high single digit decline across the pharma stocks on a blended average basis.
Gurudatta, when we talk globally, two things have happened. A, the Mylan Teva deal, clearly hinting towards consolidation further in the industry, who knows. And B, a lot of companies have withdrawn or not launched non-profitable drugs. Do you think this is making a case for some recovery in margins at an industry level?
Yeah, with respect to this, the pharma companies now better understand what particular products they should go ahead and market the products in the US and what products they need to withdraw, because certain products which are not doing well and still paying that particular the respective fees and all, which is not viable, and when they select the product also in such a way that they get a better margin out of it. Because of these two reasons, people are able to take right decisions and right products will be withdrawn and new products will be introduced, because of which pharma sector, we can say it is come to a stability compared to 1.5 years before.
Talk about, Mr. Gurudatta, the near-term impact as well, in terms of the coronavirus scare. Do you feel there is sufficient inventory? How will markets price in margin issues if APIs, for example, their prices rise further? The coronavirus is spreading far and wide fairly quickly. How big a concern is this for the Indian market?
At this moment of time, there is no much concern about the supply chain with respect to the APIs or key starting materials. Whereas if you see after 2 months or so, you will find the effect of the coronavirus issue, wherein at this moment of time we can say that at least 7 to 8 provinces near to Hubei province, which is the most affected area, is been almost, you can say it is closed, or they are having extended holidays over there. Because I have certain my friends over there, I have inquired with them also since last 2-3 days, and they said that they are still on an extended holiday. However, the eastern part of China, certain companies already started working from today. With respect to this, certain APIs or certain key starting materials will become a scarcity for Indian market, where we depend upon the key starting materials or certain intermediates from China. At this moment of time, we can say that azithromycin or even the paracetamol key starting material are not available. It may be a scarcity even in Indian market. Of course, it will be a scarcity in the global market as well.
Okay. Prakash, just wanted to understand really from you. Do you think there is a case at an industry level where margins can recover? The point that I was chatting about with Mr. Gurudatta just a short while back.
So margins is again company specific and product specific. On the blended basis, if we look at companies are recovering on a low base, cost measures are being taken in terms of cost optimization. So we do expect margins to improve marginally but not significantly across companies, because as US improves from a decline to a single digit growth, and then there is the optimization of cost and R&D optimization also, we do expect some margin improvement.
Okay. And what about the near-term impact of API on pharma companies? I mean, is there sufficient inventory for now in the light of coronavirus scare?
So I have two parts to it. So from a coronavirus perspective, what companies have talked in the the conference call, that was the most debated topic. So they have talked about 1 to 2 months kind of inventory. That includes from API to key starting materials and intermediates. But again, if one product is not available, you can't really not make the compound. So I think the supply chain can be an issue going forward. But at least for a month, we need to watch this situation very closely if it improves or not. The second point I wanted to highlight actually was 2 years back, there was a lot of environmental issues in China, and due to which some companies have actually looked at the second source, be it India, Europe or other markets. So prices perspective of raw materials, as mentioned by a couple of companies in the call also, has come off a bit, not increased. But if this issues continues for longer, then we might see impact. Currently, there was no impact.
Sure. Okay. Just to follow up on that as well, because, when we talk about earnings, especially, one has seen mid-cap companies and how their US sales have actually panned out. Cases in point, being the fact that from a low base, larger companies like even Aurobindo Pharma, Cipla, etc., have done very well when it comes to the US geography. Would you say that these are initial signs of a pickup? And if so, what could be the next possible trigger for them to be able to push their earnings only forward, Prakash?
So there are only two things to really follow. One is the product pipeline, and the second one is if you are FDA compliant or not. Because if you are not FDA compliant, you can't actually monetize the pipeline. So the companies that we spoke about, there are some supply opportunities that have benefited some of these companies. For some, there has been couple of products which have added on to the growth. So these are the two case in points we follow. Overall, as we speak, again, it's company specific, bottoms down. There are few companies which on a low base can grow. There are few companies even on high base can grow single digit if they're compliant and the growth continues with the pipeline. So all the companies on a blended average, we still believe that can grow single digit.
We'll leave it there then. Thanks so much, gentlemen, for joining us. We're going to take a very quick break now. That's the latest on the pharma pack and the trends that we're observing, especially with the US markets, coronavirus scare, and more. We'll be back in just